Today on the CEO Barbecue, we're looking at a different way of producing platinum and palladium. It's what they call urban mining, and we're doing that together with Regenx. If you want a bullet point summary of this and all the other CEO Barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Regenx is listed as RGX on the CSE, where over the last 3 months, the average volume has been about 210,000 shares. The stock's 52-week high is 3 cents and its 52-week low is a bit hard to say, but it's 0.005, so that'll be half a penny. With a market cap of just under 10 million Canadian dollars and almost 400 million shares outstanding, today this is 2.5-cent stock with a 50 and a 200-day moving averages, both at about a penny and a half. Now, this is where it normally go through the company's official filings, but the full year financials have now been delayed, and that's something that Don and I can hopefully discuss later on in the interview. And for people watching or listening to this in the future, please visit setterplus.ca for the company's official filings. Much of what I typically include in these introductions or overviews won't really make sense or apply here because, again, Regenx is a company that's focused on, again, what they call urban mining. They basically try to recover platinum and palladium from diesel catalytic converters that have lived their useful lives, if you will. And more specifically, the focus here is what is called SiC substrates. So those are your silicon carbide substrates, which traditional smelters, they have a hard time processing those due to their sort of abrasive or high temperature resistant material that's kind of hard to get through. Now, Regenx claims to have developed a proprietary non-smelting chemical leach process that they can use, and they say that recovers over 95% of the PGMs. Whether that's true, how effective it is, and can it really make money for shareholders is what I'm hoping this conversation will cover. But for this to actually become a conversation, I might have to consider shutting up already. And Don, giving you the word here. But first of all, thank you for sitting down with me today.
Oh, my pleasure to be here. Always excited to talk about what we're trying to do.
Well, the pleasure is mine, and I am looking forward to better understanding the tech here. But since this is your first time on the barbecue, we'll have to go through what I call the smell test first. So there's a couple of questions, but even before that, though, and typically the first thing that I do when I hear about a new company, it's kind of a 75 IQ thing that I do, which is you're about to learn. I do a lot of is look at the stock chart and looking at your price chart of the last couple of years, at least since you built that first commercial scale plant in Greenville. And a bunch of things happened after that, of course, but the share price has fallen by over 90%. So when I see that, the first thought that I have is what's going on here? So I just translate that to you. What is going on here?
So we're a startup, ineffective, in the shell of a long-term history company. We were your traditional exploration company that was doing the footholes in the ground to try to find more resources to sell them. And back in 2015, had the opportunity to look at what we were doing and sort of moved into a more technology based. And so was the chrysalis for who we are now. We went through some modifications to our technology, first looking at processing gold tailings, then into e-waste, and then into the catalytic converter, which we started around 2020. So long history there. Haven't answered what you're saying yet, but what it really is we've been hit with the starts and stops of your traditional startup with a new technology. We ran into some issues, some problems, and so we've disappointed the market at different times. We've, not hit what we've done. So we've been put in the penalty box a little bit in the share market price. And that's what everybody's sort of waiting for us to prove what we're doing.
Yeah. And I suppose figuring out if and how you plan to change things up here is basically going to be the focus of the latter part of the conversation, right after we've gone through that smell test that I just told you about, which, as the barbecue is heating up, I'll have to start off with the man running the company himself. Who are you, and why do you think you're the right man for the job?
So I've had a long history with the company. I joined in 2015. My background is accounting. Got an accounting degree, and then I joined some mining companies, first in coal mining and then in oil sands. And with the oil sands was a contract miner. And that company, while I was with them, we grew from about $20 million in revenue to over 400. So a good understanding of how to grow a company. And wasn't just a bookkeeper. I've never looked at myself as your traditional accountant. My focus was always to use accounting to figure out how a business operates. So how does the process work? And so that's where I have a lot of expertise, is understanding process and understanding how things could and should fit together. And that's what we need for where we are currently and where we're growing to.
Mm-hmm. Do you currently hold any other executive or board positions with other companies, or is this your only focus?
I am the chairman of a company called Iron Bow Mining, which was just a spin out of the mining assets that the legacy Regenx had. And so that is a piece that's trying to sell those legacy assets.
You're not on the board of Regenx itself, though, if I'm correct.
Correct.
Okay.
Just didn't need to be at this point, and we had a couple insiders who are currently on the board, and I didn't want to have more insiders on the board. I wanted it to have, we didn't want too big of a board, and wanted to have the space for more external than internal.
So is the idea for you to, because you say at this moment it was not needed, is the idea for you to eventually join the board?
Well, our former CEO is still on the board as the chairman. If he leaves, I might replace him. That would be what I would see. But if the current board is structured, I don't anticipate making changes to that.
Why'd you replace him as a CEO in the first place? What is it really that you were brought on to do?
Well, I came in to be the CFO originally. Mm-hmm. And then about 8 years later, he was looking to retire. He is in his 70s, so it was a strategic sort of baseline that we moved forward, that I was gradually replacing him. Moved from the CFO role to the president role while he was still the CEO. And then last year, he decided that he would want to move away from doing anything in the day-to-day operations.
Right. How does that sit with the insider ownership? I think the previous CEO was with the company much earlier, so building a position was easier, if you will. What is the total insider ownership now, and how much of that is you personally?
It is about 7%, I believe, with the board and the executives. Okay. My position is just over 2 million shares.
So that will put you about 0.5%.
Yeah.
Okay. How did you get those shares in the first place? Was that bought in the open market and financings, or did you get them as payment? How did that work?
All of them been in the open market financing baseline. We've done a few rights offering, and that's where I bought most of my shares was in the rights offerings.
Right. Well, again, going back to the share price performance and what you told me about this, sort of trying to revive it or bring up the value. Do you plan to be buying shares in the open market if you believe this is undervalued?
I haven't. because I've put in some money into some of the convertible debentures that we've been using to fund operations.
Mm-hmm. I know that you haven't, but do you plan on doing that, I suppose? And we'll talk about the business here in a moment. But essentially, what's expected here is for you to announce that hopefully soon the plant is operational, which again could open the door for a possibility for you to be buying shares somewhere. Is that something you want to do?
I do. I believe we're undervalued. I believe there's a great opportunity for it. Just in how best to invest in the company. And my piece has been to invest directly so that the company can use the money and not be paying somebody else's to buy shares from them.
Right. That does make sense. At a certain point, you do want to be supporting the share price in the open market as well, though.
Yes.
Especially in low liquidity names. So that's where I'm coming from.
Yes.
Yeah.
No, it's all a balancing act on which pot should get money in is always the piece that you're looking at.
Yeah, for sure. And it's something that is business specific. And again, we'll get to the business here in a second as well. Normally, though, where I typically go from here on out is that I start asking about the rest of the team. And that's, again, normally the geological team. In my case, that's of interest in the companies I normally interview. But it's, again, a bit different in your case. So I don't really even know how to ask this, but who's on your team? Who's really technically responsible for making this work? And have they done it before?
So we've got two key technical people. Fabricio Mara, who is an engineer by background, but does most of our research and has done most of our chemistry and keeps it understanding how the chemistry should and does work. And we have Bob Fair on the operations side, who's had a long history of working in this space, both operating plants and being part of sales at other pieces along our supply chain type. We also have Rick Purdy, who was one of the board members who joined as we moved into Tennessee, joined the company to help us with the development. And he has a strong interpersonal and sales background. So he does a lot of the dealing with the customer base, supply chain base.
Right. Okay. And those guys have they done it before? I mean, essentially and I suppose that's again, normally what I ask, but that's not exactly applicable to you because I guess no one's really done it before the way you're hoping to. So, but do they have specific experience for the task at hand?
Yeah. So Bob has operations, has worked in these type of plants, chemical plants and that baseline. Rick has worked for startups, for entrepreneurial type companies, and knows how to grow those types of baselines. And Fabricio has a long history of chemical experience. So it's a marrying of all of these different pieces that allows us to continue to look at how we're doing things and how we move forward.
Having mentioned a couple of times here that it's a bit of a different tech, is there a royalty on it or any type of, bottom line burden or top line burden?
No, it's completely our own. We don't have to pay any royalties, any outside costs. It's just strictly our own technology.
Right. How does and again, this is still within the smell test, but do any insiders, board or executives, whoever it might be, provide services to the company outside of your regular management activities? Like normally, again, with exploration companies, that would be your helicopter camp, marketing, financings, or something else.
No, we don't have any insiders who have supply services except for your general type management.
Sure. Yeah, no, that makes sense. That's typically what happens there. Again, still on the same topic, still within the smell test, talking about incentives here and specifically 2025 incentives, but also for you as a company in general. How do you measure success and how is executive compensation structured to reflect that success? As in, again, relating that to your discovery companies or exploration companies that I look into, they might relate it to discovery success or something like that. What are your KPIs going to be tied to?
So we don't have official tying of our KPIs to performance at this point in time, partly because of the type of tech it is and that type of baseline. But what our KPI is us getting it to production, to be full production. That's what we're driving for. That's what we are pushing ourselves for. Um,
Right.
for myself right now, not many know this. With what we've had and what we're doing in that, my salary has been deferred. Most of my salary has been deferred
Mm.
since October. So I've been reinvesting myself into getting this company going.
How do you plan on getting that salary eventually? Is that something you would request as a cash compensation, or are you going to take it back in shares?
Uh, Whatever's best for the company at that point in time.
Hmm.
So I don't want to take it in shares if it's highly dilutive. And if we're generating the cash, it's better to do it as a cash payment.
When do you think you're going to be able to take it? I suppose that's going to open the door to the next part of the conversation.
Yeah.
But you take it, once you're announcing that that plant is up and running. So let's just kind of, kick the door in with that part. But when's the plan going to be running?
We are scheduled. We just finished our water test last week, and so we're running chemical tests this week, and so that's the next stage. We project to be producing end of the month, really into August is where we're starting to do our ramp up of production.
Okay. So
So,
very shortly here.
yes.
Okay. Well, again, this might be a good segue into talking specifically about the business or the business plan. And we're revisiting, I suppose, the what question, in my opinion, as well. It's like, what is Regenx? Like, if you go to a family reunion, that one
Yeah.
really old aunt asks you to explain it to her, what do you tell her? What's this company?
So on the fancy side is we're a secondary refiner.
Okay.
We're a company that takes used um, catalytic converters and refines them to produce platinum and palladium. So you're in that marketplace that you're a company that is transforming waste into literally gold, really platinum and palladium.
How is that different than your, I don't know, Umicores or other sort of established urban miners, if you will?
So it's not much different. It's just what we've done is we've focused ourselves in a specific niche. And that niche opportunity is presented to us in a way that it was being ignored. And there's a reason it was being ignored. And it was being ignored because the majority of your secondary refiners, the vast majority, are smelters. And they do their refining with heat, melting. And so when they put the stuff into their facility, it's about melting down. And you said before that we're in the SiC, silicon carbide. But to step that back for people who don't understand, is that catalytic converters really come in two basic types. Gasoline, that's the major for most automotives. And those ones, they're built, the the insides, the honeycomb, which the air passes through to create these reactions, is made out of ceramic, cordite. When they started putting more and more into diesel, they found that ceramic wasn't robust enough. That because of the regen and the extra heat that diesel engines run at, they needed something stronger. So they went into silicon carbide. Because it's reactive to the heat and it takes a lot more heat, when you throw that into your furnace, you can cause operational issues and efficiency issues. The furnace has to be at a much higher temperature to get it to break down. So most of your Umicores in that didn't want these because they were running inefficiently when they were doing it. And so that's where that niche for us came in is so we're doing the same basic thing as these majors, but we're doing it in a market that they didn't want. And our process is chemical. So it allows us to run with a lot less energy and a lot less components of that.
Correct me if I'm wrong. I don't know it too well, But I think Umicore does have the capacity to handle SiC as well.
They do. They all can do some, but they prefer not to.
Okay.
And that's where they had is historically they could feed this one in because it was such a small portion. Um, to get a little bit of history, so gasoline catalytic converters have been along for a long time, 70s and that sort of thing. Regulations increased that diesels didn't have to do it until about a decade and a half ago. So there was some diesels that always had it, but the proportion sort of is growing. Like I think in 2019, the proportion of recycled catalytic converters that were SiC was 9%. In 2025, it was projected to be 30%. Mm-hmm. So, and where it goes is that 10, 15 years is important because you only see it in the recycling stream when it comes to end of life. So those groupings of vehicles that have been required to have diesel catalytic converters are now starting to hit the market of end of life, which is increasing the amount of proportion of SiC in place.
Yeah. Okay. I'm starting to get a better idea of how that's formed. How do you differ though on an efficiency scale? You mentioned that, like if we take, I don't know, one catalytic converter, how much platinum and how much palladium are you going to be able to extract versus how much one of the majors might?
So we're close. The majors are at 99% because you collect almost everything when you burn something. We're at 95 to 98%. So we're close. The biggest difference we have is cost. A chemical process is on a variable basis is more expensive than smelting. And most of those smelters have had long histories, so they're only looking at their costs on a variable basis. They don't have to pay for the infrastructure anymore. Right. If you do a full in cost, we're about the same, if not lower.
Okay. So how much? What would that be like? Is it ounces? Is it a half an ounce? What is it that you recover?
So that's the part that I always hate because we're not a mine and we don't have control over our ore. So in a mine, it's easy to talk about, well, here's what the drilling has said, here's what's in the ground. Mm-hmm. Our ore base changes every year and changes for every manufacturer. So every manufacturer has different loadings in their catalytic converter based on what they believe is important. Some of them want to tune up their engine more, so they would need to put more precious metals in the catalytic converter because their engine's running more exhaust through. Others, their engines are turned down, so they don't have to load as much in their catalytic converters. And it depends on your engine size, which then affects what the size of your catalytic converters are. So, and then every year or so, if they make any changes to models or engines, the catalytic converters also change. So every catalytic converter has a different amount of loading. So it's a different grade. And so it all depends on what our customers, our suppliers, have collected and are sending to us for what the input of our grade is. So it's a constant churning of piece. Our pricing's based on the grades. So we work in a margin area type thing, so that we're working as saying is if it's a low grade, we pay a lot less, but we have a margin that we attribute to that feedstock.
Right, because that would be the follow-up question is like, doesn't that make the business like, not knowing what grade you're going to put out, doesn't that make the business quite unpredictable and you don't really know how much money you make?
Well, we know what we're looking at as margins, and we look at what we are, and then that's where some of the sourcing comes into, is that we're trying to look at what the sources is so that we can look at saying, okay, we're buying this, that's going to be that. We're going to need to look for some more higher grade, those types of understanding. And it's a flip side of both those, is that some of the lower grade we get bigger margin. Some of the higher grade we get less margin. So some of the parts, it makes some more sense on what you can buy to go low grade versus high grade.
Is there like a minimum though? Is there like is there a PEA type of equivalent? I know you do have a bit of a mining background, if I'm not mistaken. So you know what I'm saying here. But is there like a PEA or something that you can run where you show economics before you actually start production?
Yeah, that's we build in we build in we understand what our costs are. We understand what the current pricing is. Then we look at saying, okay, what's the maximum we can pay for that feedstock?
Okay, so where does that leave you in terms of economics? Like how much money will you make once it's operational and at full capacity?
So this is the biggest difference between mining and a startup that we're listed at. I can't tell you that because we've had runs arounds with the regulator on what we can and can't do because I don't have a history of performance. Everything I'm saying is a projection, which then becomes promotional. And so the difference with when you're talking to a mining group is you've got your 43101s, your third-party expert reports that say based on these costs that I can do these pieces. Yeah. But in a production environment that we don't have anything that can be third-party verified to give out information on our returns. I hate to be able to say this, but my hands are tied with the regulatory stuff. Until you've got your own history proven, you're not allowed to tell anything about performance.
So how do I value this in that case? I mean, you as an again, you have an accounting background. Yeah. How would you value this?
Yeah, and that's the hardest part we have trying to sell our story. Is to be able to show what we can do without being able, where our hands are tied on economics. It's a crazy little niche in the marketplace, is that what they're trying to do is protect people from having people do pump and dump and promotion versus projections. And because you have no history, it's all promotion.
Is there a capacity though? Is there like how many convergers can you process or something like that?
So we are projecting to do, when we start up, is 4,000 pounds a day.
And then we go back to grade in that case. But is there an average? Like, is there an average for the converters that you have now or something like that?
Low grade, we've got in around 250 parts per million. And then it gets up to a high grade of 1,200 parts per million. And super grade is 2,000-ish, but you don't see much of that. So somewhere in that low to high is your mid, which is where you'll end up most. So that's the best I can sort of dance around, your 250 to 1,200.
Right, 250 to 1,200. You're gonna make me do math off the top of my head.
And then in your midpoint,
I like the 2,000. That's easy to work with. What is that? 0.2%. And then you say that you recover 95% of that. So 0.2. So half of that would be 0.1 or 0.12. You recover 95% of that. 0.1%. So something like that. That would be kind of the upper realistic range. Is kind of what I'm getting at this.
Yeah.
That 95%, by the way, that you mentioned, is that, how did you test that? Is that kind of a, isolated occurrence, or how likely is it that it's repeatable at scale in real life scenarios?
So we've done thousands of lab tests of it and process tests, but we also have run our operation, and we were getting those recovery rates before we relocated.
Okay. So you would have to, Are you going to scale it up, or like how are you going to prove up that this is that it works in a real case scenario before doing the majority of the capex or something like that?
Well, we've already done the capex for our first module, and we already had our first module operational. What we ran into last year was an issue with utilizing glass line reactors, and the abrasiveness of the SIC just wore the glass line faster than we could have ever imagined.
Yeah.
So as that happened, we also ran into Hurricane Helene, which shut down vast areas of where we are operating.
Mm-hmm.
And at that point, we looked at where our operation was located and that we were sitting on a place that we were leasing an operation that had been just sold. And the group wanted to convert it from what we were doing to being a complete storage area. So we had the opportunity that our lease could have extended 2 more years, but we would have been fully operational when they wouldn't want to renew our lease. So we decided we took the time while we were down and having to do equipment repairs to relocate.
Mm-hmm.
And that's where we relocated from Greenville to Newport, Tennessee. And so as we relocated, we have readjusted our line and changed out the components that we were going to change out to take advantage of all the learnings we had of the first operation.
I do want to talk about some of those learnings and other stuff that you came across in the meantime. How much money is it going to, I suppose that's not something you could tell me either. Like I was going to ask you, how much money is it going to cost you per ounce of platinum that you put out there, or like at what price do you make money?
We and I'll say this with the thing, when platinum and palladium were around 1,900, we were still projecting to make money. So anything that goes up just adds money to the bottom line.
Okay. So when the operation ran the previous time, you were making money?
No, I'll caveat that. We were a startup and we were running startup batches. So we weren't doing enough to cover fixed costs at that point in time.
Right.
But that was only because we weren't running enough continuous operations.
Okay. But had the operation been going the way you plan to have it going soon this summer, you would?
Yeah. Yes.
Okay. What is it exactly that's different again that you're going to do different this time so that it doesn't happen like it happened last time?
So I'll throw technical here, is that we went from the glass line reactor because fundamentally, we're chemicals, we're acid based. And so acid base eats most materials.
Mm-hmm.
So we went from glass line because we couldn't do the abrasion to what's called FRP. It's really a fiberglass plastic as our main reacting tank, which is a lot more robust in its ability to handle the abrasive material.
Mm-hmm. Yeah.
We also, during that time, we'd been doing the research on our chemistry, and we've made modifications to our chemistry that allowed us to reduce the temperature. And so the very first time we were doing it, our temperature was much higher, that closer to 250 Fahrenheit. So that's why we went to a glass line, because it was into a reactor. We've now been able to lower that to 180 degrees Fahrenheit, which now allows us a lot more opportunity in the fiberglass plastic.
Okay, I hope we'll get to that part. I'm obviously way out of my depth. I think I've been way out of my depth since the moment I said hello. But hopefully we'll get to talk about that once we talk about some of the operational challenges. But to go back to the revenue model here, if you will, and how you make money on this thing, do you fix a contract at a specific price, or work mostly at spot or offtake agreements, or how does that work?
So right now, as a startup, we work on spot. And that's until we're established in the marketplace, we'll continue to work at spot. But we're also looking at a couple different and discussing with people, a couple different models. And one of them is working with the actual smelters who get this product into theirs, but don't want to run it in their furnace, but want the metal. So what we're discussing with them is a tolling option where they would pay us X amount to just process it and give them back the metal. So that's a portion of where we're saying you move the risk profile of the price of metal out of the equation. And so you can do a baseline of a certain amount of your production at this tolling option, where you're also then still able to go out and get product in the marketplace to work with the spot and deal with having the metal.
Is it hard to find off takers or people to sell this to? Like, what, even in the first place, thinking like, why would someone buy from you instead of just concentrate from a mine?
Yeah. So what we produce is actually equivalent to a concentrate from a mine, actually more pure than a concentrate from a mine. So we're a high concentrate that comes in. So we have any refiner is open to us, and most of them are clamoring for us to send us their product. Partly because it's so highly concentrated, is that any refinery is always about how much effort do I have to put in? So how much material do I have to process to get the metal out? And if the more highly concentrated you are, the more wanted your product is. Because again, you're processing it. So if I only have to handle 1 kilogram versus a ton, then I want the 1 kilogram if it has the same amount of metal in it.
What would be the grade of the concentrate that you would send in?
Ours is close to 30%.
Okay. How do you manage that part with the variable grade on the, because again, the off taker is going to want certainty, whereas you as an off taker of the converters, you don't have that certainty. So how do you manage that?
So that's the part that's simple for us, is that if you think about it, our end product, the beginning grade is relevant because we're just sucking the precious metals out of it. And then whatever little contaminants that you get through, that's why we're not pure. But even if I have 100 parts in the ton, I'm getting 95 out each time. So instead of saying I'm not with a fixed quantity at the end, I don't get a kilogram every time. I get, if it's a smaller grade, I get 200 grams type thing. Mm-hmm. So the amount that comes out the end is proportionate to the amount of the grade is. So the higher grade, the more mass I get out at the end.
Yeah.
The lower grade, the lower mass I get out. So the percentage stays fairly consistent. It's just how much mass I generate.
And that is irrespective of the input, essentially, because let me tell you where I'm coming from with that. Mining, when the grade of the ore can also influence the way you use your mill, essentially. So sometimes you're going to have different mills or different circuits adjusted differently for different ore. There's blending, there's ore sorting and whatnot. There's a lot of different things that we do in mining so that we can make sure the mill carries it and does as efficient of a job. So the mill process for you, essentially, how does that work, and does it work irrespective of the input?
So our mill process, let's step back to see what our process is.
Sure.
What we get from our suppliers is a powderized version of the catalytic converter. So we're starting with a consistent product. There may be some other elements in it. It may not be pure, but in the majority of what we're doing, it is consistent of silicon carbide and your precious metals. The only other pieces are in is whether or not things get collected during the process. Mm-hmm. As it was milled up, where there's some copper or whatever other pieces that got included in your grinding type thing. So those are what we call like the contaminants, which we're trying to get out of the process. Any metallic ones, any precious metals, even from your copper, come out into our end product. But you have to really think of what our process is think of it more as a sieve. Here's this powder at the
Okay.
top, and you keep shaking it through your sieve. And if you consider that and this isn't going to work on a practical basis, but just as a thought process. If you think of the platinum and palladium being the smallest material, and you keep sieving it down so that you trap all the rest of the stuff except the platinum and palladium, that's what we get at the end. So our process is about extracting the platinum and palladium from the stuff around and then moving that stuff aside, and that's what comes out the back end.
Mm-hmm. So in the end, it doesn't matter all that. It doesn't matter all that much what you put into it, or how does that work? Because again, it would work irrespective of the grade of what you've put in, as far as I understand it, based on what you just told me.
Yes, that's correct.
Okay.
So the only difference grade makes is the quantity of final product we get.
Yeah. Okay. And what does it depend on other stuff, like obviously the chemistry, I suppose, of the catalytic converters matters too, or like what's kind of a level that your
no because the catalytic converter is a solid structure.
Yeah.
And so for the majority of what we do is it's just a molecule of silicon carbide plated with a platinum palladium. And so what our process is saying our first process, the chemistry, is about detaching platinum and palladium from the silicon carbide. And so it's taking that plating and saying, okay, I've sucked you off. So I've detached it from the silicon carbide.
Mm-hmm.
So now I've got platinum and palladium sitting in a solution because it's connected with our solution. So it's a liquid version of platinum and palladium. Right. We separate that liquid from the solids, the silicon carbide. So now we've got a liquid version of platinum and palladium. Now we do another process that says, okay, I'm going to knock that platinum palladium from the liquid form, and it's only liquid because it's attached to other molecules. And so our other chemical process knocks that platinum palladium off the chemical and turns it back into a solid.
Yeah.
And we collect that solid as our product.
Yeah. I seeing that visually will probably also make more sense. I'll try to figure out some visuals to put up on top of the screen. I think you have some. I think I saw some in preparation for this. It is platinum and palladium that we've only been talking about, but rhodium, I mean, that's, small, but it can be very valuable. Is that something you're going to be able to catch as well?
So we don't catch rhodium very well, but it's less of an issue for us. 99% of diesel catalytic converters don't have rhodium.
Okay. But I was thinking if that's something you could catch, then later down the road, you could be working with more or different types of converters.
We could, and we'll look at that in the portion. And that's why we specialized in this niche, is because we knew what our technology could attach type thing. So,
yeah. I often see people asking or claiming even that they don't know what the bear case for platinum and palladium might be. And over the past year, they've been right. The price of platinum has done really well. But if this works, and again, it worked, obviously this is forward looking, but it works at scale and everything else. If it does, aren't you the bear case for PGMs as a whole?
Somewhat. I mean, the part is where platinum and palladium had gotten hammered a little bit in the marketplace was that the concept of electric vehicles and the whole concept that there would be no ICE engines within 10 years, 15 years, that everybody would be driving an electric vehicle. And so the rapid decline in platinum and palladium were saying the majority of those used for those items was in catalytic converters. So if catalytic converters aren't going to be a future, well, what's the value in platinum and palladium? And that's where the bottom of the market fell out. Because even 3-4 years ago, palladium was over $2,000.
Right.
and when platinum was up in the 1500s or even more. So, but what we're seeing is, one, electric vehicles are not coming as fast as people had projected.
Mhm.
And that's partly where you see the rebound in pricing, that there's going to be a lot longer shelf life of catalytic converter vehicles.
Yeah.
The second one is that looking at saying, battery vehicles are not going to be able to do everything and be everything. And the concepts of the electrical grid requirements and all that. So hydrogen is coming back into play. And one of the big things on hydrogen was that to make both on the production of hydrogen and the use of hydrogen, it requires a platinum membrane.
Mhm.
So the sort of life for platinum is getting new energy based on the hydrogen market.
Yeah. Yeah. So where does that, like, if you wanted to ramp up over time, you would be additional production on the market from, a spot that was essentially not seen as potential supply in the first place. It's in nobody's
Yes,
models, essentially.
it's nobody models, no.
Yeah.
So, I mean, that's the part where all the models we see is that if hydrogen goes or that ICE engines last longer, there's a deficit. And there's a deficit partly because the mining isn't keeping pace. Again,
Mhm.
as we talked about grades and that, most of the mines have done their easy mining, and they're doing their lower grade mines which most mines do. The lower grades is near the end of the life. So you're getting less production from mines. Um, Building more smelters isn't a thing that jumps up that's saying we want to do. So alternative recycling, alternative urban mining is the only way that you can increase production of these critical minerals.
Mhm.
And where we also see is also in the bear market is that's going to be required because even with electric vehicles, even with that, the amount of people wanting cars in the world is increasing. I mean, you look at the amount that the proliferation of vehicles in Asia and Africa, and especially India, is very, very low. So, there's a lot more vehicles going to be coming on the roads in those areas.
Mhm. I'm thinking, I'm getting a rough idea of how you plan on making money as a company. So how Regenx plans on making money. How do you take that and turn it into money for shareholders? Though, is that what's the actual investment case, if you will? Are you planning on returning money through dividends or buybacks? Is it going to be acquisitions and growth, or how do shareholders make money here?
So our first part will be growth, and sort of the having one operation and then expanding it and then looking at alternative locations. But after that, um, once you get to a certain size, it becomes a dividend model. Um, that's a place. Whether or not dividends straightly as straight dividend cash or with the amount of shares we have out, doesn't make some sense for a buyback, which would be that other part. So we'd live in those two areas.
Yeah. Well, how long does that? I understand it's a hard question to answer again, but how long does that plan take? How much more time and of course money do you need before shareholders again see a return on this?
Yeah. So we're looking, we feel we're at that last hurdle, that we are just in those last little bits that we're about to have the production up and running and streamlining it, moving it forward, and then it becomes self-sustaining. And we believe part of the delay in people, you know, going with our story is twofold. Is one, our hands are tied to be able to tell you exactly what it means on the financial side. And the
Mhm.
second is, show me revenue.
Hmm.
Show me it's I'm ready for the proof. So people are sitting on the sidelines waiting for prove it to me. And that's where we're sitting, trying to push ourselves to say, okay, yeah, we're going to show you that we're producing revenue. And once we start producing revenue, then it becomes having a history of being able to show where the returns are. And that's how we can then further our story.
When are you going to show FCF though? Free cash flow is what you need essentially to grow. When are you going to show that?
We project early next year.
Okay, early,
like first quarter next year. Yeah.
Well, so it's essentially you start up and you start making money. Is that not a bit of an aggressive plan there?
Well, that's where once we get to the first model full production, which is what we're going to do over the next few months, then it starts generating itself as free cash flow.
Right. Okay. How much money do you have to spend before that? You said CapEx is largely done. Is it, what else do you have to spend money on?
We just have to do operational costs.
Keep the lights on.
Keep the lights on.
How much money do you have right now?
We don't have much, but we have strong investors who have been funding us on a piecemeal basis to keep us moving forward.
Do you mean like ATM, or are you going to do a financing, or how do you finance it?
What we've been doing is convertible. We've been doing convertible debentures with friendly investors.
Okay. And that's something that you think is going to be there for you, because again, that's a bit of an uncertainty there too. Like,
yes,
even though it is
we don't need,
term,
yeah, we don't need much more. We're getting right to that inflection point.
Is there any government money to be had for you? I suppose you could sell this as, or well, it is, or you are selling it as kind of a clean tech startup, if you will. Is there any government money to be had?
So we're in the middle of applying for a substantial portion from the U.S. Department of Energy. So we put in an initial proposal, and they just sent us back a thing requesting additional information. So getting through the first hurdle with a group like that is very promising, and so we're preparing our second proposal to them.
What is the proposal for? What would you get? What are the strings that might be attached? What does the whole thing look like?
So we can't, with the government, we're not allowed to say the amount at this point in time, but it'd be millions, and it would be in the form of a grant, and it would be used to fund the growth and the addition of a second line of production.
Okay, so it's any timing or anything that you can give on that, or
it's government. They work at their own speed.
That's one way to put it. Talk to me, maybe then in that case, because it's maybe the less pleasant things here. But again, clean tech is what you pitch this as, and it's also partly because you call it a no tailings structure, I guess is what you call it, or something like that, where like essentially you don't. But how does that work? Because I suppose there should be something, because there's something left right after the catalytic converter. Yeah.
So what we have been working on, and it's the second step of our evolution, is when we say no tailings, what it was is we were an inert material that was just could be put into anything type thing so it was really just silicon carbide that was left. So it wasn't anything that was a harmful tailings, like from a mine site type thing, where you've got the chemicals. But what we're working on is, because silicon carbide is also a critical material, our tailings is highly rich in silicon carbide. Yeah. So we're looking at some of the manufacturers of silicon carbide and saying, can you take our product and clean it up and become pure silicon carbide again?
What does it look like? Like if you tell me, copper tailings, I can imagine what it's a mountain of dirt, right? What is that slurry? What does that look like in your case?
So ours is really just a gray powder. And so ours looks almost exactly the same as when it came in. So the feedstock's this gray powder that has a bunch of platinum and palladium in it. We send it through our process, and you get the gray powder, just missing the couple ounces of precious metals.
Do you have to get any specific permits because it is a powder? I suppose some parts of it, the silicon parts would be the lightest.
Yeah, no, and when we're saying powder, it's not ultra fine.
Mhm.
It's just 100 mesh is where we are. So it's it's not your health hazard powder, but it's enough to be um, more of the consistency of flour.
Mm.
Let's go with that type thing.
Okay. What is the permitting process? Like what are the kind of permits that you have to apply for?
So the only permit we had to apply for was an air permit. Because we are using an acid and you're heating the acid, you have fumes.
Mhm.
And so we have to put our fumes through a scrubber, and the scrubber then exhausts to the environment. And so we had to get permits for air.
What about local relationships? Again, that would just using my mining brain here for a
Yeah.
second, or at least half of the one that I still have. But what's the local situation? Do you have to get local agreements signed or something like that?
No, what we can set up our operation in a warehouse. We actually did set it up in a warehouse in
Yep.
an industrial park. So it's except for the stack, it's completely inside. We do stuff with fire and safety, but that's all, your normal course of
Yeah.
operations of containments and storage and all those types of things. But that's always just your fire safety regulation.
How many people do you need to have the plant running?
We currently have five who can operate the current plant.
That's it. 5 people.
Five people in operations. Yeah.
Yeah. It's I suppose I imagine it'd be way more actually. I do want to talk about the less pleasant things here, fuels, so the
Sure
risks
thing.
and challenges. What
Yeah.
are, from your perspective personally, what are the biggest risks for the company right now?
The risks is cash flow, and that's where keep generating enough, uh, getting enough investment to keep us moving forward to because we're in that bridge area where we're right at the end. We've done all this thing, but you've used up most of your cash to get you there, and so we're at that last piece. So managing our cash, managing investment, that's our biggest risk at this moment.
Hmm. What about other stuff from the operational perspective? Again, we talked about a lot of it just now, but I'm thinking even floods, utilities, HVAC, secondary containment, stuff like that.
Yeah. So our biggest risk is equipment failure because we're dealing with an acid. And so it was designed around the concept of knowing that could happen. And so containments, secondary pieces, all those types of things. We have a robust set of operation procedures where we do inspections and checks and that. I mean, those operational procedures are the reason we understood that the glass lines had failed. When I say they failed, we didn't have a failure. We saw that the linings were worn down to an unsafe area and knew if we continued, we would have a failure. So our operational procedures and checks are all about understanding how we're processing and that. And then we also have the other side is the efficiency pieces there. We have to continue to make sure that we're running the right chemistry and that we're getting the recoveries that we needed, that we should have. And for that, we never sort of get rid of anything until we are sure it's all been processed,
Hmm.
because whether or not we have to rerun or do a second time, those types of things we had seen, whether or not we could do that if something went wrong that we didn't get the recoveries we needed.
Mm-hmm. Well, you're mentioning operational or operating equipment essentially. What about getting specialty equipment? Where does that come from? Is that a challenge transporting it, tariffs and whatnot, everything in between?
So we had originally done some in our original pilot plant, had sourced some pieces from China and had some of them were very successful, some of them weren't. So it's like anything with China, you always have to watch. But that led us down to the ability to look local. And almost everything that we've now done is sourced within the United States for what they're doing. And most of them are almost all of our components are not specialty. We designed it using standard pieces. Um, and that was on purpose because it was easier to integrate how we did a standard thing than trying to engineer something different. And then if you're trying to engineer something different, your development time goes really long.
Hmm.
Anytime you just start dealing with an engineer on something that's unique, well, the extra layers of complexity that they put in just to make sure that they cover their engineering side is is phenomenal.
Yeah. Yeah, I can only imagine. But you're dealing with far fewer regulations, it looks to me, than a mining operation, obviously.
Yes, we can. I mean, if you compare the biggest difference, I joke with urban mining is that they bring the reserve to us. We set up in a convenient location, and the reserve gets brought to us instead of having to take the operation to the reserve.
Yeah. Yeah. But you do have on the non-operational risks, if you will, you do have or I might be mistaken because the last time I saw it, you did have it, but a litigation going on right now with one of your I believe spinouts from 2017. It's been a while
Yeah.
since shareholders have gotten an update on that. What's going on there? What does that look like?
So what we fundamentally believe this is going to be cleaned up fairly soon, and in our favor. We've now told them is that the chemistry we are using has no bearing and no uh, doesn't look anything like what chemistry was theirs, and so they've sort of stopped pursuing and just has let it sit in limbo. Um, and so that's where we're sitting on that. I believe they've had financial troubles, so they don't want to spend on lawyers to try to clean it up. But we know that we don't have an issue. We know that what we've done is all of our own and has no they have no claim to it at all.
Yeah, but there's nothing that you. What I'm really thinking about why that would matter is if there would be another kind of slowdown, because I think,
Yeah.
and you said that yourself, but part of the reaction in the stock price has been operational speed, which is not being great. So is
Yes.
it something that could slow your operations down?
That litigation, no, not at all.
Yeah. Okay. Fair. What else I've written down here is a single partner dependence slash risk. Your again feedstock and JV concentrate around Davis and PGM renewal. Is that not too concentrated, or how do you see that?
So it's a single one, but it's not the only one. We are developing other relationships, and we have been getting supply from other relationships. They were the primary partner. They're the ones who came to us with the niche, and so we work closely with them. But we're not exclusively required to work from them. So,
Yeah. Okay. The auditors thing. I mean, that just came in a couple of days here before the interview. Your financials are delayed. As I said, it said that it's because you basically haven't paid the auditors. What's going on?
so like I told you, we're in a cash flow crunch right now, and we are just getting we had prioritized the operations and um, looked at and said, well, what could we know? Could we delay? And we didn't want to, but you have to make hard decisions sometimes. And the audit was one we decided to delay so that we could have the operations push forward.
So you're not going to have financials up until this summer. You're operational.
Well, we are generating some more convertible debentures that we're looking that would then finance the audit, and our baseline is that we've gotten approval to be out until the end of September. So we look likely we will uh, publish by that point in time.
Is there a penalty that goes with that from the exchange or regulators?
No, what we had to do was agree to a management cease trade order. So
Right.
at this point in time, management is held. So it doesn't affect the general public, but it just affects management.
Right. What I would be looking for is basically to see how much money you spend. So that's something that when
Yeah.
I'm looking into exploration companies, I do what I call, I'm an accountant by
Yeah.
training as well, by the way. Um, but what I do is I like ratios and spreadsheets. And so I do the ratio that's, I call it the exploration to administration ratio. Look at how much money they're spending on exploration versus administration. So that's the main thing
Yeah.
I care about. But also just the size of the G&A and, keeping the lights on. You said that's what you need to be doing here. That's the only thing you need money for, essentially. What is it? What are you spending per month on keeping those lights on?
Um, we're about um, we're about 100,000 for lights on, an additional 100,000 for for the facility type thing on what it's being spent on moving it forward to the next factor, and that's a month.
Yeah, that's not personnel and stuff like that. That does not, or does it include personnel as well?
Includes personnel.
Oh, okay.
Yeah.
Management as well, like office and
Yeah.
everybody. Yeah. Where are you guys based out of? Again, office. Where do you work from?
So our office is listed at St. Albert in
Yeah.
Alberta, but we don't have an office. Um, uh, with growing through the COVID and the decentralized, it makes no sense. So I work from home. The CFO works from home. We do have a small lab in Vancouver
Mhm.
that does the testing work we have there, and then our facility in Tennessee.
How do you market the company if you're not in one of the financial hubs, Vancouver, Toronto, for example? Given that you're a Canadian company, how do you market the company? How do you bring the company back to investors' attention?
So we've done different programs with different people, and we've put that on hold a little bit for right now in the fact that we know what the market's wanting. Market isn't wanting more information per se. They're waiting for us to show results. And so that's the part. Where we're also doing the marketing is things like yourself. And I've been on a bunch of podcasts and this is more about showing our story to more different people.
Mhm.
And in the days now of of technology, you don't have to be in Toronto um, to be able to get yourself noticed. Um, you can meet with somebody any place, and you can talk to anybody in any place. I don't believe that you need to be in certain locations anymore to be able to do it. The days of meeting in and good old boy network where you met with people in bars and that, that's not really what it is anymore. It's about making connections with people using the technology that's available to you.
Mhm. That's that. When I said how you plan on doing it, what I meant mostly by that is that institutional investors still do prefer sort of your face to face
Yes.
contact. You could take care of that through conferences or stuff like that, or roadshows.
Yeah.
Is that something you plan to be doing once you're operational?
Yes. Yes. And that's the part where we will relook at how we do things. The institutional aren't touching us at this moment, not until we've done the proof.
Mhm.
And so that's where at this moment, you're better to keep your powder dry and then hit that marketing when you have the full story to share.
Yeah, yeah. That's the question here for me would be how do you regain trust with retail shareholders as well? I mean, and this goes back to it's not it's not new, like it's not a 12-month thing, it's going back to 2023 and even before that
Yes.
under previous CEO and so on. How do you regain trust? Is it just operational efficiency, and how long could that take?
Well, yeah, I mean, the only way to regain trust is to perform. And so that's all we have is to be able to keep putting one step in front of another and then keep making progress and showing the ability to actually deliver.
Mhm.
And that's I what we did in the past is we probably overpromised and we were overly optimistic. And you get that with startups, you get that with parts where you're doing something new. You always project that nothing's going to go wrong. And then you put the projection out there as if nothing, if everything went perfect, you'd be here. Well, everything never goes perfect, and we're here.
Yeah.
So that's the part we have, and it's hard to disprove a negative. We can't do anything about what's been done in the past. We can only do what we can do in the future.
Yeah. Well, it's not going to be easy, and it's that operational thing. You've now committed to having it essentially, running by the end of the summer, more or less. So that might be a good time to revisit as well. I think I've been through most of my questions here. Again, way out of my depth. I'm sure there's going to be more questions popping up, and if I start following this story, I might start better understanding it. We could have better conversations next time. What am I forgetting to ask you though? What did you come here hoping to talk about that I failed to bring up?
Well, I think you've got a great understanding of what we're doing, and have taken the pieces apart. All I can say is that we believe there's a strong future, and we believe we can deliver on it.
Yeah, good. What keeps? It's what I'm forgetting. I should be asking this, but what keeps you up at night when it's the middle of the night? You wake up, start thinking about something. What is it that keeps you up at night?
Right now, it's just keeping the lights on. It's just keeping enough of the cash coming in to get where we are, because we are so close that we just need to get this pushed over the finish line.
Yeah. Good. Well, let's revisit this in a couple of months, Don. I appreciate your time. Thank you so much for sitting down with me today.
Thank you very much for having me.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing, and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."